à tous.
Hello everyone, welcome for this new session in the morning on a subject that brings us further from the sobriety about which we were talking earlier on energy, because we're going to talk about public debt. Sobriety may not be the rule in the matter. So, endless debt, is it reasonable? That's the question that is being asked. I'm a journalist, Dominique Chepot. To talk about it, we'll listen in a few seconds to Céline Ginet, who comes from the Cercle des Économistes, who's a professor at Sciences Po X, and who's on home ground, if I may say. And next to her, we have Pierre Grabegna, who's the general manager of the European Mechanisms of Stability, and for 7 or 8 years, he's been the Minister of Finance of Luxembourg. Next to him, we have Sarah Carlson, who's the Vice President of Moody's, obviously. We'll have questions on the French public debt. And then we have Varnez, who's the President of the French Association of Corporate Treasurers. When do we have Herline Coquet? Thanks for being here, President General Director of Allianz Trade Group, and Olivier Klein, hello, who's the President at the Trade University and President of the French section of the European League of Economic Cooperation. And then we have Alain Bifani, who's the President of the ACPA, a consultancy firm for public institutions such as the World Bank and many others. Céline, you have the floor. You all know the principle and how this works. So to introduce the gist of the subject, is it reasonable to have endless debt? Hello, everyone. I will suggest some background information so as to introduce the subject. And I'll give you some figures. The total debt is 247% of the GDP in 2021. In the Eurozone, the public debt reached 91.6% in 2022, far from the Maastricht criteria. So obviously, these figures are significant, but they hide realities that are much different. And we should define them in a way as to know exactly what's the leeway from the debtors, may it be a private or a public debt. We often find it on financial markets. The interest rate is lower than the growth rate because the debt refunds itself. The industrial countries have largely benefited from this context during the last 2 decades because the inflation rate was really low. The interest rate was low. The central banks would buy back some of the debt, and so they could have a debt at a very low price. The situation in the emerging countries was different because their profile is more risky, so their debt is a shorter term one with higher debt rates. Simultaneously, the private debt increased as well in a considerable way. The household debts with the banks, with the companies, with the financial contributed to the growth. But that was also a source of financial instability, as we saw with the 2008 debt crisis. Today, we have a problem with the debt because the context has changed. With the inflation that came back, the minimal rates are going back up again, and the growth rate is going down. We even have recession indicators in some countries of the world. And despite the fact that this inflation is more circumstantial due to the war in Ukraine, it is possible that it maintains in the meantime. And this, together with the geopolitical instability, risk of could actually entail the maintenance of long-term rates at a high rate, and that could weigh upon the growth, and that could have actually some burden on the debtors. So the question is the sustainability of this, namely the capacity of debtors to maintain their commitments at short, mid, and long term. It is very difficult to determine thresholds because the sustainability of the debt depends on the profile of the debtor, of the structure of the debt, the institutional context. So we need to see the trajectory of the debt, the pathway, and to make it stable. How can we do that? The first reflex is to think about some austerity policy with increasing taxes, for instance. But we've seen that in crisis eras, austerity is not efficient on public finance. What is the other option? The other option is to mobilize national and international savings and to guide it towards public and private investments that will allow to generate more growth over the long term, more wealth, i.e. more revenue. And for this, we need to guide these investments towards energy transition, reduction of inequalities, human capital, so as to create a new value that will be beneficial for potential growth over the long term. I'm giving you the floor. Thank you for this introduction, Céline. You will take the floor again afterwards. Pierre Gremna, the European Mechanisms of Stability, it's hundreds of billions of euros. It was created in 2012, I think, to help states such as Greece, Spain, Portugal. Public debt in the Eurozone, is it sustainable? Will we avoid a crisis? Thank you, Dominique. Thank you, Céline, for this introduction. And I totally agree with what you've just said, so I'm not going to repeat what has been said. The European Mechanisms of Stability, maybe we should spend a few minutes on this subject because it's not well known. We had actually a gap. When you have a common currency and we do not have an IMF type of institution, we need to create it because we can't do monetary adjustments, so we need to have a specific instrument. So the ESM has 80 billion capital of tools, and we can borrow up to 500 billions on the market with a AAA rate in terms of debt. And we provide it to states that are in difficulty, and that is what we have done with 5 countries. So I would say, I try to look at it in the context of renewing hope. Should we be depressed or not? Or should we be optimistic? So I'm going to give you 2-3 figures that make me optimistic. The public debt went from 97% to 91.6% last year. We were during the COVID era. Now it has gone down quite drastically. We have a GDP, the wealth of the European Union countries is 2% higher than before the COVID crisis. So we only needed 2 years to recover, and before we needed 7 years during the sovereign crisis of 2010. So we were better prepared because we had the instruments that were suitable. We made reforms. Europe was very proactive. We had the NGU, we had the bank union. And something that is fundamental as well is that despite the financial problems that we had in Switzerland and in the US during spring, the situation stabilized. The Eurozone, Europe, was saved and did not go through such turmoil. That means that we can act sometimes, and we can reduce risks. And last thing, which in my opinion, that would actually deserve highlighting, we are living through a wonderful era because the unemployment rate has reached 6.5%. We've never seen such a low rate. 2 generations were required before we reached such a rate again. So that gives us a good context for this issue. As for the cons, well, we have the inflation rate. That gives us a lot of concerns because inflation, indeed, seems to reduce the debt, but it reduces also savings and purchase power. Second thing, The inflation rate had gone to 10%. It has gone down again, but something fundamental. The underlying inflation, when we withdraw oil and food, it's still 5%. That means that the rates that we apply, 4%, well, it actually is still a negative rate when we talk about the underlying rate. We think that they're very high, but when we think about the underlying rate, they're still negative, so that's a big concern. So, last point, what are the risks? When you have high interest rates, well, of course, it's difficult to fund the debt and to pay the interest rates that are twofold, threefold, fourfold. And something else, since the purchase power is being reduced drastically, we have salary claims and demands that are coming, and we have union movements. And the states want to set it off and to have budget policies that are in contradiction with the inflation. So if we have this during the Eurozone, from a scale to 0 to 10, what is the risk for the Eurozone? Just a figure, from 0 to 10. Oh, you're asking me a question that is terrible. 5. That's what I'm going to say. 5. All right. And I will say 5, and I'm going to say why. That's just 5. It was difficult. Well, I'm playing a very bad role here. No. Because we have a window of opportunity of some years to make things better. Because we need 8 to 9 years for states to go back on track. We require several years before we go back on track. This is why. Sarah Carlson. She's on the right-hand side for those who are watching us. She comes from Moody's. We know the work that has been done by Fitch and Standard & Poor's over the last weeks. Well, how about the French debt? Is it risky or not? Thank you, Dominique. Thank you, all of you. For each of the 443 countries that we rate, we're looking at the foreseeable trajectory, looking at the wealth of the state and the capacity to increase the wealth. This capacity is related to the governance, to the solidity of the state's institutions. To make it short, the institutions of a country are more important, and this is important for the debt. The cost of the debt is as important as the outstanding debt. It's a AA2 stable rating in France. It's a bit above Finland and Austria in the Eurozone. Only Germany, the Netherlands, and Luxembourg are AAA. But it's a bit higher than Belgium and the United Kingdom. In this context, France can support a debt burden that is higher than most of the countries, thanks to its solidity of its economy and its institutions. However, in 2024, it is highly probable that France be the third state that is the most debted state after Greece and Italy in the Eurozone. And this debt burden, which according to our estimates could reach 414% of the GDP, this could affect the capacity of France to respond to future shocks. Despite this very high rate, when we compare with comparable countries, the debt burden is more affordable, is more efficient than in other countries. This represents 3.5% of the total revenue of the public administrations in 2022, so i.e. a similar level as AAA states or AA states such as Australia, Canada, United States, and the United Kingdom. In terms of GDP percentage, the interest payments are in line with those of similar countries. This being said, it is obvious that the problem that this will come back, and the debt burden will make France more vulnerable for the future, and that would affect the indebtedness levels. The budget trajectory over the midterm indicates a rhythm that is very progressive in terms of budget consolidation. Indeed, the government only aims at bringing the deficit under the 3% of GDP by 2027. This reduction rhythm of deficit is slower than that of most European countries. When we think that the country will not reach these objectives, probably in terms of deficit, and the debt burden will certainly continue to grow progressively with a low likeliness of sensitivity over the midterm. France has not been able to reduce its debt in a significant way, even during the recovery, the cyclical recovery area. So over the longer term, we should avoid an increase of debt, and that would entail a budget policy that is one of a kind. It would require strong political will and a consensus to deal with this persisting budget deficit. Reaching this consensus would be politically difficult due to the political choices that it would require in terms of modification of expenditure and revenue amendments. However, without such a change, the credit policy would be subject to downwards pressure. Forward-looking, the rating of the country could become negative if we were to conclude that there's a deterioration of the debt cost and that it has become significantly higher than in other comparable countries. There would be a weakening of the commitment in favor of the budget consolidation during the mandate of this government. That would also increase negative pressure on the credit. We see that it was very fine-tuned in details. If we are to sum up what we understood, well, the first part was going quite well, because from a tax point of view, everything went well. But then at the end, we see some warnings, and there is a possible degradation. So, when is the next date? That's towards the end of the year. Okay, thank you. So we'll go back to questions. So we're going to listen to other sectors, namely the private sectors. What about the crisis? What are the future risks? Thank you, and hello, everyone. This is the French Association of Corporate Treasurers. I'm going to talk on behalf of companies. As you know, recently they've gone through two exogenous crises, the 2020 crisis and the Russian-Ukrainian war crisis in 2022. In 2020, they had massive support from public subsidies from the states and with technical redundancies, and they had abundant cash provided by the European Central Bank. But for 18 months, this context has changed. After the Ukrainian crisis, most of the companies were faced with an increase of their production costs, a slowing of their activity, and the central banks, to fight against inflation, triggered a massive increase of the interest rates. The ECB rate went in 1 year from minus 0.5 to 3.5%, after 10 years where it was a break-even or negative interest rate. And facing this change of context, the principles that allow a company to define what's the adequate level of debt have not changed. The company needs to have a debt threshold that is sustainable. A company that has debt should be able to pay interests, to pay the capital, without risking its operations. And for this purpose, it needs to monitor two ratios: the number of cash flows necessary to pay back the debt and the cover of its financial costs with its P&L. And that has a difference with the increase of rates. And they need to create value. And for this, they need to make sure that the financing cost is under the revenue of its assets. When we understand all these values, we understand that when the operational cash flow reduces because of the conjuncture, and then the financial costs increase because of the increase of the interest rates, we need to change the way we see the debt level, especially when the financial structure is very tensed. So the question is, this adjustment of debt, is it a synonymous of crisis? This is not what we see today. Obviously, we have an increase of defaults. We've seen that over the last months. They go from 50,000, but that's below what the threshold we would know before COVID crisis. It was more around 60,000. And when the Métis, for instance, asked the question to its members, most companies say that they are capable of finding the funds that are necessary for their operations. They have some time to adjust to the economic context. For instance, those that have a PGE, they have 8 years, and the increase of rates translates in terms of financial costs into progressive costs refund, where they renew their fixed rate debts. So we can think that the adjustment of debt could be generated on an ad hoc basis by each company depending on its situation without creating any systemic crisis. This is crystal clear. Orange, but not red. Okay, thank you for all these indications that are eye-openers. So then we have a big insurance group, Allianz. What is your analysis? Both on the short term, can we avoid a financial crisis? We are always very close from a financial crisis. What are the fundamentals? What do you observe?
I am cautiously optimistic with downside risks, similar to my fellow speakers here. But I see more yellow than orange. Basically, we are going through the fastest hiking cycle since 1999 in the US and in Europe. But what we are seeing is that its impact to the economy is coming with a delay. Normally, this happens in 6 months. Now we are seeing that it's happening more like 11 to 12 months. And there are several reasons for that. One of them was mentioned in terms of households and companies having accumulated excess level of cash. And there's another silver lining, and that is the maturities of the corporate loans is relatively long, and they are fixed term. So it's not hitting hard in the short term in terms of the additional costs that the corporates have to endure. Additionally, we are seeing still very strong, i.e. low unemployment rates, because everybody is expecting a shallow recession and that it's gonna abide, and still the corporate profits are resilient. But there's a but. Interest rates are still going up. We are expecting the US to go to 5.75, in Europe to about 4%, and basically the transmission is coming late, but it's gonna start to bite towards the end of this year, I would say, especially as the companies are seeing their profits squeezed. The economic growth is faltering. We are talking about 2 to 2.5% growth, which means this is gonna suppress the margins, profit margins, by about 3%, a little bit higher in France, 3.5%. There's also a debt repayment wall. So for all the small and medium-sized enterprises, about 65% of them will have a debt repayment by 2026, which means what we call fragile small and medium-sized enterprises, corporates, they are about the ones that are going to be defaulted or probably going to go insolvent in 4 years. This number is coming back to pre-pandemic levels. It's at 14% in France and at 7% in the US. So some sectors are going to get much more hurt. So when the tide moves, we see who's naked. and some sectors are going to get less hurt. For discretionary consumer durables, for transportation, hospitality, they are more indebted, so they will be more hurt in this cycle. For sectors like pharmaceuticals or IT software, they're going to be going unscathed. So when I look forward, it's going to be, we are on a tight rope. We can avoid this crisis, but there's one thing I should remind you, and that is in 2024, we're going to have a lot of elections that are covering 75% of world's GDP. That's a big number. So there's a lot of uncertainty, and there is a significant amount where the states are quite indebted. They have less levers to really bail out the corporate sectors, which means there's also the danger for a policy mistake. So that's why, coming back, I see quite a bit of optimism in the short term. But I'm quite, I see a lot of downside risks in terms of what could happen if there's a policy mistake, especially from the central banks.
The big risk is in 2025. I understand. Thank you very much. Merci beaucoup. Merci beaucoup de vous être exprimé. Alors, on continue.
Okay, we carry on with the Olivier Klein now. We're going to carry on looking at all of the different points of view. You are a teacher and president of the French section of the European League for Economic Cooperation. Endless debt, is that reasonable or not? First of all, hello everybody. Just like to point out one simple thing. On endless debt, if we're talking about volume, it doesn't really mean much. For a big company, if it needs debt to be able to grow, for a state, if it has a lot of debt, and this for a government, increasing debt is very unhealthy. So we have to be very careful, and because we are mortal, and we need to be able to refund our debt before we die when we're human beings. But for other entities, this is not the case. This is very important to understand. Once we have that in mind, what is it makes debt unhealthy? And means that we have to limit our growth. These are a question of ratios. There are many ratios. The ratios, if we look at the cost of debt for the budget, whether it's in the public sector or for a company, the ratios are the debt compared to the GDP, the debt level compared to the EBITDA, or the profit level for the companies. This is an important thing. So we'll determine the fact that a borrower is solvent or that a debt is sustainable based on the anticipated trajectory, and we have to anticipate. That's a difficult thing. That's also the nice thing about it. We can't say in a static way, this is not good or it is good. We have to look at the trajectory. So we have to anticipate, and everybody has to do that. The economic agencies, the financial markets, to see whether an entity is going to be solvent or not, depending on the changes in anticipated interest rate, the anticipated growth rates, the macroeconomic situation, and according also to the anticipation for the states of the primary debt rates as well. All of this has to be looked at and can be summed up perhaps in a rather oversimplified way by differential gaze at the interest rates that are often looked at, because the insolvency risks are not the same depending on the interest rate, whether it's nominal or whether they're real. The question that is asked in order to get to the aim of what we're talking about today is that today are we in a situation of growth of ratios which is dangerous? The answer is yes. On a worldwide level, ever since the year 2000, as a minimum, we have had a level of debt in the private and public sector for emerging countries and in advanced countries, which has increased very, very quickly. And one reason for that, and that's why it's interesting to have a diagnosis afterwards, the fundamental reason for that is that interest rates have remained for a long time very much below the growth rates, and this has facilitated bubbles in real estate and shares, but it's also means you have bubbles for credit, and so over-indebtedness, which is affected when the interest rates change. So we have changed the inflation regime. We've changed the inflation regime after the pandemic for reasons that are obvious. We can see that this inflation, or the transient part, is if we look at the indexing of prices on salaries and on prices, this is much more resilient and is at a much higher level. This means that the central banks, and this isn't a mistake, they quite rightly increase their interest rates a little bit late. It's true. They're increasing their interest rates because you have to break down this level of inflation that is too high. A little bit of inflation is okay, but not too much. It's a question of adjustment. So the central banks have rapidly increased the inflation rate. They restricted now because we are in a situation of vulnerability overall financially around the world. If we go too quickly and too strongly at a particular time, we can break the bubbles. We have to bring the bubbles down gently. It's difficult to do that. Often the bubbles burst and this causes systemic problems, and we have to reduce the level of debt. So I'm optimistic because not everything is going to happen in 5 minutes, but we are in a difficult terrain where we're vulnerable. When you have a crisis, it's a question of anticipation. If the anticipations are positive, that's fine. Everything will take place gently. If all of a sudden there's a sudden anticipation and new agreements that is going to be difficult not to refund, but to be able to refinance normally in the future, that can lead to a crisis. And so this means that the companies, I won't repeat what the president of the FSD has just said, but the companies who have a high level of debt have to deal with the situation. As for the states, it's true that France is one of those. They also have to be very careful, and France is one of the most indebted states in Europe. And I agree with what our colleague from Moody's was saying just now. I absolutely agree, but the potential for increase in taxes in France is virtually zero because we're already at a very high level. We're the world champion in terms of taxation. So we don't have very much capacity, so we have to do structural reforms to increase the growth potential. And of course, we have to transfer expenditure we often want very useful to more useful expenditure to increase growth potential. And that's where I am optimistic. It's easier to say, but more difficult to do. Thank you very much. So to sum up, the period is a bit Darwinian then. But Darwinian because we're talking about selectivity of risks and situations. Alain Bifani, finally. And then we'll look at some questions from the audience. What is your analysis? For the time being, it's fairly consensual, really. In the short term, there's no disaster. Perhaps in the long term, you're not really committing yourself very much, any of you. Are you going to have a more iconoclastic position? Are you going to be different from the others? I'm going to try to be, yes. I think we can look at this question as the speculators do. In other words, when is the next crisis going to occur? And we can ask, as the responsible economists do, how do we get out of a system where the crisis is inherent? And since for half a century, the financial problems have been accumulated. Structurally, we're always moving towards a debt crisis. All we can do is delay the crisis. But the reality is the need for debt exists, above all, to be able to find counterparties of political choices that are not independent. The structural debt of the current accounts is extremely serious as well. And the most important thing to reduce aggregates are the crises, but also wars, or massive devaluations of currency. And then inflation is a soft version of this. In the presence of the fiduciary currency, the social economy and wars push national authorities to print money because they don't dare to manage a modification which would be too costly in political terms, in terms of wealth distribution. In terms of dollar convertibility, Nixon agreed with China that they would benefit from an excess of labor and therefore started mass devaluation. So it was necessary to manage the imbalances and make them operational at the same time. And for the aggregates, you had to find counterparties at the right price and a good reason for creating debt. In other words, the paradox is that financing exists, but you have to find the customers. And you remember the subprime crisis and the excess savings we've talked about are present in every sector. The to be able to maintain profitability which will satisfy the holders of these aggregates. This becomes more and more heavy, and it constitutes a problem in itself. But the title is "Be Careful About Financial Crisis." So without requiring any financing, financiarization becomes a problem in itself, and the volumes are constantly increasing. And the crises are no longer accidental; they even become necessary, because otherwise there wouldn't be a ceiling. So the bank's profits, for example, and their bankruptcies no longer are caused by their loans to the economy. What becomes the primordial is the market activities, so that aggregates can continue to accumulate. And the crises become consubstantial to management of balances. This is part of the processes. They're no longer accidents that disrupt reasoned management. So there's no longer a question of managing today to choose tomorrow. With the imbalances between circulation and production, this means we're only able to manage part of the debt. And this means we have an extension of deadlines and not lose control. And we know that the exit will be a crisis on the world level. Money is accumulating. The overall repercussions will be manifested by the massive concentration of assets. And this model, therefore, means that there will be a series of shocks and increase in inequalities. The political players try to deal with this puzzle without causing a crisis. A lot of them won't like what I'm going to say, but elections are an extraordinary invention, because thanks to elections, we only have a slice of time to manage. And you know from history, the people before us were useless, and we don't care about what's going to happen afterwards. But if we give an institution this kind of sliced if institutions have a longer period of time to manage, this means you are able to determine the management over a period of time, and this means climate, for example, is much longer term phenomenon. And so this is managed in a different way. So to conclude, what I'm saying is we need to have a very profound thinking about a system where the crises are inherent, necessary, and recurring. So the next crisis is on the way then. So before we take questions from the audience, there's a question I have. Maybe you're wondering about this yourselves. In the public debate, we're talking about the fight against climate change and ecological and energy transitions. Will all of this enable us to get more debt at a particular time? Is there a historic and societal momentum? And can public and private investors, are they able to say at this particular time, we have to accept greater debt? This is the idea in France by Jean-Pierre Ferrani and a lot of other economists. I'd like to say in a few sentences, each one of you, to have your opinion about that. Do you think there is something specific that might happen in the question of debt, bearing in mind the fight against climate change, etc.? Who would like to say something? It's a free-for-all. You can, anybody. Okay, I'll start. On the European level, we believe we are the leaders in this subject because of having recognized the climate emergency, and at the level of Europe, we have a priority which is to invest in digitalization and climate change. This is a next generation EU program which makes available huge amounts of money. We have seen this need, and on a European level we have mobilized money, but that's public money. We also have to mobilize in the private sector. One important part of what we need to think about is that the European budgetary rules are based on the Stability and Growth Pact, PSC. We have to change from a Stability and Growth Pact to a Sustainable Growth Pact. The acronym is the same, but when we had the Stability and Growth Pact, we were thinking about stabilizing, and growth would come afterwards. And thinking increasingly in Europe, we realized we have to have growth, and the growth has to be sustainable. And in sustainable, of course, is the environmental aspect and climate and digitalization. There's also the sustainability of public finance. So there has been a change, I think, and this has already been said, I think, and I'll stop here. We absolutely have to have growth in Europe and productivity. The only way of doing that is to have productive investments. Sarah Carlson. Do you think the owners, the borrowers, are ready to say, well, basically, the fight against climate change is modifying our approach? Is that the case or not? Or is it neutral? Does it not have any impact? I have three things to say, quite simply. First of all, our noting methodology for sovereign debt doesn't distinguish between the different types of expenditure. Nevertheless, the mathematics of the equation for debt are what they are. Therefore, the investments that increase the growth potential can, everything else being equal, contribute to a positive dynamic for debt. Secondly, the governments are confronted by many challenges that are important for the future, and not just the climate transition. In many advanced economies, there are issues because of the aging of the population. This is already harming the potential for growth and public finance. This situation will only worsen over the next decade. The changing in the political landscape has put pressure to increase defense expenditure. Social risks have also increased because of issues to do with the cost of living. That's why it would have been very important to benefit from the good years, in inverted commas, in terms of with low interest rates, to create budgetary margins by making politically difficult choices and by implementing an anticipatory budgetary policy. Finally, for most of the advanced economies, the cost of the transition to a low-carbon emission economy are important but manageable. Let's take the example of Germany, the biggest emitter of greenhouse gases in Europe. According to the German State Bank, Germany will to achieve climate neutrality, it will cost 5,500 billion euros. More than 60% of these investments will be carried out in any case. On an annual basis, this will result in investments of about 5% of the GDP, in about 10%, which is 0.5% of the GDP, will be provided by the public sector. So who would like to ask a question from the audience now, perhaps? Let's see how many questions we have. Okay, fine. Okay, we'll start with the questions, and you'll be able to, then our panelists will be able to answer. Madam? The microphone is on its way. If you could just tell us who the question is for everybody. How do you manage African debt? Is Africa allowed to get debt to transform and grow or not? How do we manage African debt? We don't have a specialized speaker in that. Would somebody like to say something about this? This is a question that is very complex, of course. First of all, Africa, but not only Africa, but also the emerging countries, for their energy transition, they will need the help of advanced countries, because otherwise you can make efforts in advanced countries, but if the emerging countries need capital they don't have to carry out their transition, if for the advanced countries it's just a question of pushing pollution into the emerging countries, that's a false solution. So occasionally I get the impression when I hear the environmental slogans that if we're clean here, that's fine, and we don't care about anybody else. But that's not going to make any difference to the planet overall, it seems to me. So it seems to me that we need to have a big effort made by countries that are producing less CO2. They should focus more on countries that don't have the means to make those efforts. And so we need to help them. And of course, they have to do it themselves, of course, but we have to help them develop that. There are levels of debt today, it's true, in Africa and elsewhere, that are very high for certain countries. And part of that is financed by China also. So there, China has to agree to participate in the overall discussion about debt of third countries and emerging countries, to be able to think about how, in an ordered way, we can improve the situation. It's not easy today. I don't think there's really any other solution. Yes. Yes, sir. You have a question here, sir? It's a question for everybody as well. Today we can see that French savings have never been at such a high level and so well remunerated. Isn't this also perhaps a way for states to mobilize these savings and to avoid having to use credit on the financial markets? Everybody be winning, we would get better remuneration from our savings and the government wouldn't be so indebted on the financial markets in a structural way. Daniel, perhaps? Yes, in fact, I think the question of the savings surplus is absolutely central, and we'll have to be careful not to hide one thing with another. In other words, have to be careful when faced with the climate crisis, not to use this as a good reason to further increase our debt and paradoxically create a financial crisis, bearing in mind that financiarization is just a response to the climate problem. And this problem, despite its importance, is just a symptom of the phenomenon. And so, in fact, I would tend to say that I don't see why we link the debt to climate in that way. It's not really natural. Before we ask what will be the impact on future generations, we could also ask who is the winner and the loser in the operations that are taking place at the moment. Again, we are transferring long-term views to shorter terms. The climate is a long-term problem. 2050 is a long-term horizon. But of course, the climate disaster is a symptom of the systemic crises that we are in, and it has to be dealt with in that way, and not in the opposite way. In other words, using climate and using it as a pretext for inflating and increasing debt. On savings, anybody else want to say something?
Actually, what's interesting is the companies have had profit records last year, so you would expect them to increase their investments by 30%. They only increased it by 3%, which means they're buying back shares, they're hoarding cash, they're sitting on savings, to a little bit to your point. And we have a 2 trillion gap to fill. Now, you have to if the companies don't move, the lenders are pushing for it. The banks are pushing for this. The insurance companies are pushing for this. The companies that are pushing for ESG and doing their transition plans are benefiting from better ratings, better conditions, financing conditions. Their bonds are less volatile. Their spreads are lower. So it's happening. What's not really happening is this doesn't trickle down to the smaller corporates and also to individuals. And because we don't have a full level playing field in terms of how the transition mechanism is working, and we don't have a level playing field in terms of the harmonization of regulation and the rules of the game to really facilitate this transition. So, and that's the part where the states will need to play a role. So we are staying at the high level right now. We are not going down to the SME and the individual level, and that needs to come for this to happen.
Merci. On continue les questions. On va prendre un peu au fond parce qu'on a pris.
Okay, we'll carry on with a few more questions now. Perhaps at the back? Yes, madam, yes. Do we have any idea of the impact of inflation at the moment on state revenues? And has this been estimated? That's the first thing. And more generally, when will there be a European rating agency? Sarah.
Right, so I mean, your question is about the impact of inflation on government tax receipts. I mean, this is one of the reasons why we did not see, particularly last year, the same degree of deterioration in public finances that we might have, because actually when inflation goes up, things like VAT go up, in some cases incomes go up, corporate profits sometimes increase, which increases tax take. So that's something that helped to finance some of the measures to help countries absorb the energy shock that we saw last year. These, however, are transitory. And we would anticipate that these effects fall away over time. The question is, do the expenditures that they financed also fall away over time? And if they don't, that's something across Europe that obviously would complicate the path of debt reduction. Across the board, that's not something we particularly expect to see, but the picture across European countries is quite diverse. We have some countries with positive outlooks on their ratings in Europe. We have some with negative outlooks, most with stable.
Pierre, une phrase peut-être, Agence européenne.
Non, l'agence européenne, oui, bien sûr, on en a besoin, mais ce serait faire croire que c'est parce qu'elles sont...
We have to be careful whether it's American, thinking that it's because American it's not realistic. I don't think that's true at all. The second thing I'd like to say that this short-term reasoning we do, thinking about the benefits of inflation is dangerous. If we say inflation is good because we're going to increase our profits and revenues, we have to remember that the interest rates and on the monetary policy of the European Central Bank is going to become even more restrictive, and we're going to change from a flat, almost a virtually flat growth to a recession. And so this beneficial short-term effect is very quickly counterbalanced because it's going to bring down growth. And the key thing is growth, and growth through productive investment, especially climate-related investments. Personally, I think that finance has to become green, quite simply, because if finance doesn't contribute decisively to the climate objectives, we are not going to succeed. Thank you very much. We have another question. We have 2 minutes left before the conclusion by our economist. Okay, we're fighting for the microphone here. A very short question and a very short answer, please. Hello, everybody. I'm just... what do you think of the concept of perpetual debt in 2014, where there was the Greek crisis? There was an article that was written talking about eternal debt. And what do you think of this? And you talk about from that point of view, from whether it's public debt or private debt. Pierre. I would just say one thing about perpetual public debt. We can answer as follows. Well, the important thing isn't the amount, it's the debt ratio compared to the wealth of a country. As long as we have that under control, the debt can increase slightly without it being disastrous. You can call that perpetual debt. That's not really what we had in mind. The important thing is to compare the debt to the size of a company and the size and wealth of a country. So, last question now, please. Either the gentleman here, he's been asking for quite a long time. Last question. Yes, I have to say that I am very encouraged by the diverse points of view, which is not at all very pessimistic and not ideological at all, and saying we have to have rigor. I don't thinking of you at all, Mr. Dominic Seux, of course. I also think that we will have to finance the transition. We don't have a choice. We will have to increase the debt. If that's not enough, shouldn't we then increase the taxes for people who can pay those increased taxes? It would have been a shame if somebody hadn't asked that question. A very nice question. We're a team here. I won't say whether the taxes should be increased or not. Yes, you do. Yes. Come on, you have to answer. There's one thing you have to bear in mind, which is that the investment for climate transition is something that will be done by companies, by definition. However, the companies have to deal with restrictions I mentioned earlier of the sustainable debt and the ratios of debt over cash flow and the operating income, and they cannot escape from that. Otherwise, there is a threat to their long-term survival. However, public authorities have a role to play to loosen the restrictions. This is what we see very clearly in the US with the Inflation Reduction Act, which makes it possible to subsidize investments in the US for climate transition. And so Europe certainly has a role to play there by defining the public policies, providing incentives to reconcile the financial rules and the environmental objectives by, of course, defining a sustainable budgetary trajectory. First, no. So do you think France should increase taxes?
Of what do countries want to do? Do they want to change the structure of their expenditures? Do they want to cut them? Do they want to change the way in which they raise revenues? It's a choice for every individual country to make.
Céline, le
We
mot
don't
de
make policy
conclusion. Le
recommendations.
mot de conclusion.
A few concluding words. So very quickly, in the short term, it's clear that the risk of financial instability is not zero, but it has to be looked at in relative terms. A lot of things have been done since the 2008 crisis in terms of macroprudential measures and the European Stability Mechanism. We've seen that the American banks, which were destabilized recently, this led to an immediate reaction by the monetary authorities who managed to prevent financial contagion. So these are reassuring signals. For the longer term, clearly, we have to focus investment that generates positive externalities in terms of the social and economic terms, and also it's necessary to generate international cooperation. As the CNUS said, pointed out 2 days ago, there is a lack of investment in the south to deal with the climate transition. And so in that case, debt is not only reasonable, it's justified because it's a question of growth for tomorrow. This will ensure sustainability of yesterday's debt, making debt reasonable. Thank you very much, everybody. Remember the concluding phrase, debt is reasonable. I'm sure that 10 years ago in this roundtable, that's not what we would have heard, I can tell you that. Thank you very much for your participation. Everybody is available to answer your questions one-on-one now. Thank you.